You inherited a fortune. Not gold, not land, but a boat. A wide, deep-bellied ship built to survive the North Atlantic. And with it, a decision that could make you one of the richest men in Norway, or drown every coin you own somewhere off the coast of Greenland. This isn't the ship you're picturing. Forget the dragon-headed longship. Forget the raiding crew screaming toward an English monastery. That ship was built for speed and violence. This one was built for something far more dangerous to your bank account: patience. It's called a knarr, and it is, quite possibly, the most important business asset of the Viking Age. Because while the longships were busy earning Scandinavia its reputation, ships like this one were quietly building its fortune. So let's say it's yours. What exactly are you holding? And what is it going to cost you to actually use it? A knarr wasn't cheap, and it wasn't simple. Where a longship was long, narrow, and built for rowing, a knarr was short, wide, and deep. Built almost entirely to carry weight under sail, with a small crew doing the work oars once did on a raiding ship. That difference in shape is the difference between a war machine and a warehouse that floats. A working knarr could haul somewhere in the range of 20 to 40 tons of cargo, which meant it could carry the entire economic output of a farm, a workshop, or a small village in a single hold. But here's the paradox. Almost nobody who used a knarr could actually afford to own one outright. The timber alone, oak for the hull, pine for the mast, required felling and shaping dozens of mature trees, and that's before you account for the iron nails, the wool sailcloth, which took an enormous number of sheep and months of weaving to produce, and the skilled shipwrights who spent an entire season building it. A single ship represented the kind of capital that could bankrupt an ordinary farmer just to construct. So how did trade routes stretching from Norway to Iceland, to Greenland, to the Baltic, and down into the rivers of Russia ever get built on ships nobody could individually afford? The answer is the part of this story that should surprise you.
Are you ready?
The Vikings didn't solve this problem with kings or armies. They solved it with paperwork. Or rather, the oral and legal equivalent of paperwork, because most of this was recorded in memory, oath, and later, saga, rather than ink. They called the arrangement a felag, a partnership. And the ownership stake each person held in that partnership was called a hlutr, a share, not a metaphorical share. An actual, tradable, inheritable portion of a ship and its future profits, agreed upon before a single sail was raised. Here's how buy-in worked. A wealthy farmer or chieftain with capital but no interest in months at sea might buy a large hlutr, financing the voyage's supplies, trade goods, and the ship's upkeep in exchange for the largest cut of whatever came back. A skilled sailor with sea experience but no capital might contribute labor and navigation skill in exchange for a smaller share. Other investors could buy in with cargo itself: furs, walrus ivory, dried fish, iron, contributing goods rather than coin, and claiming a share of the eventual sale price when that cargo was traded abroad. Icelandic sagas describe these arrangements in surprising detail, including disputes over exactly how large a man's hlutr should be relative to what he'd put in. Proof that even 1,000 years ago, "What's my cut?" was a fight worth writing down. This is, in effect, one of the earliest documented examples of pooled, share-based commercial risk that we have from medieval Europe. Historians are careful not to call it a joint stock company in the modern sense. The legal machinery of shareholding, limited liability, and corporate personhood wouldn't exist for another 600 years. But strip away the legal formality, and the underlying idea is strikingly familiar. Multiple people, contributing different amounts of capital, labor, and goods, agreeing in advance on how the winnings and the losses would be split. And you were going to need that shared risk, because the voyage itself was where all of this got real. Let's build your cargo. Outbound from Norway, your hold might be packed with iron tools, soapstone vessels that don't crack over open flame, timber for treeless Iceland, and vodmal. Coarse, heavy wool cloth so standardized in size and quality across the Norse world that it functioned almost like currency. Coming back, you're hoping for walrus ivory and hide rope from Greenland, furs and falcons from the north, or silver and silk if your route runs east through Russian rivers toward Byzantium. Every leg of that voyage was a negotiation. You didn't have fixed ports with fixed prices. You sailed into a harbor, and the value of your hold was whatever the local market. And your ability to haggle said it was that day. A good season could see cargo value multiply several times over between departure and return. A bad one could mean selling ivory into a market already flooded by 3 other traders who beat you there. And that's before the sea itself gets a vote. This is the fatal flaw baked into every voyage. A knarr traveling from Norway to Iceland, or Iceland to Greenland, was crossing some of the most unpredictable open water on the planet, with navigation that relied on sun position, bird flight patterns, and memorized landmarks. No compass, no charts as we'd recognize them. Storms could snap a mast, swamp a hold, or drive a ship hundreds of miles off course. The Icelandic sagas are full of ships that simply never arrived. No dramatic battle, no villain, just weather and distance winning quietly. When a ship was lost, every hlutr in it was lost with it. There was no insurance company to call. The risk wasn't spread across an industry. It was spread across the handful of people who'd bought into that one hull on that one voyage, which is exactly why the felag system mattered as much as it did. A single wealthy backer risking his entire fortune on one hull, one crew, one crossing, was gambling everything on a coin flip against the North Atlantic. But a group of investors, each holding a partial hlutr across possibly more than one voyage or more than one ship, was doing something much closer to what we'd now call diversifying risk, without ever having a word for it. So let's actually run the numbers on your voyage, in the terms a Norse trader would have understood them. Not modern currency, but silver by weight, the real medium of exchange in the Viking world. Say your outbound cargo of iron, timber, and wool represents a value of roughly 100 marks of silver in Norway. You sail for Iceland, where timber alone is scarce enough that its value jumps sharply the moment it hits the dock, plausibly turning that portion of your hold into a return worth close to double its origin value. You trade the rest, load up on Icelandic wool and dried fish, sail home, and sell again into a Norwegian market that's had months to build demand. A genuinely good season, on a genuinely well-run voyage, could plausibly turn that starting 100 marks into somewhere close to 200 by the time everyone's hlutr gets paid out. Now subtract what it actually cost you to be in this business in the first place. The ship itself, if you're not among those lucky enough to have inherited or partnered into one already built, represents a construction cost that alone could eat a huge share of a single voyage's profit. Add crew provisions for a season, repairs from ordinary wear, and the near certainty that at least one voyage in your career is going to be a partial loss, and the picture sharpens. This was never a business for someone who needed steady income. It was a business for people who could survive several disappointing seasons in exchange for the handful of exceptional ones. That's the real balance sheet of owning a Viking trading ship. Not gold pouring in every spring, but a slow accumulation of wealth built on shared risk, hard-won navigation, and the occasional catastrophic loss that a felag was specifically designed to help you survive. The people who got rich from this weren't the ones who owned the biggest ship. They were the ones who understood how to spread a hlutr across enough voyages that one bad crossing couldn't sink their entire fortune, literally or otherwise. The knarr never got the reputation the longship did. No one wrote sagas glorifying a good wool trade the way they glorified a raid. But look at where Norse influence actually took root. Iceland, Greenland, trading posts stretching into Russia. And you're looking at the wake of ships like this one, funded by shares nobody today would recognize as a modern investment. But that worked exactly the same way. Put in what you can afford to lose, take your cut of whatever comes back, and hope the sea agrees to let you keep it. If you want to see what happens when this same instinct, pooling money you can't afford to lose into a venture you can't fully control, shows up somewhere completely different in history, that's exactly the kind of story this channel exists to tell. Subscribe if you want the next one, and let me know in the comments which historical business you think deserves the same treatment next.